Welcome to Coast View, the show that every single day celebrates the men and women who are making coastal Mississippi such a great place to live, work, and play. You know, from time to time, as we have done along our journey for the past 2 years, we get involved in issues that are important to coastal Mississippi. And today, you know, we'll have a guest. We'll certainly celebrate his leadership for sure, but we're going to really kind of zero in on a really, really important issue facing coastal Mississippi now, and that is an issue involving flood insurance. We'll talk about insurance in general, but we're going to talk specifically about flood insurance. But as you know, I mean, coastal Mississippians know all too well that we have to deal with the cost and constant changes related to not just homeowner insurance, but business insurance, even rental insurance if you're renting. It's been super dynamic for a lot of years, and for the most part, it's also super complicated. It's hard for the average person to get their head around all these swirling issues that involve homeowner insurance. We've had to wrestle with like higher costs, especially if you own a home, and especially if you own a business. You know what that dynamic has been like over the last many years. After Katrina, though, we started to get our head around things like the reality of wind coverage and how that works. If we live near the water, we were beginning to understand and appreciate the flood insurance program, the National Flood Insurance Program, and we also had a strong appreciation for the low cost, the relative low cost of flood insurance. The National Flood Insurance Program, incidentally, was actually established back in 1968, and we'll talk about some high points about it here in just a second. But after Hurricane Katrina and then other hurricanes that followed and a growing number of other natural disasters happened, it set in motion an extraordinary challenge for the federal government in terms of what was essentially a growing debt that existed within the National Flood Insurance Program. Just kind of give you an idea of this, by March of 2017, the amount of National Flood Insurance Program debt was around $24 billion. I should also point out that and this is not just a coastal issue. In the time between 1996 and 2019. 99% of U.S. counties experienced at least one flood event. Think about that for a second. That's pretty significant. So you've got a program that has a lot of stress on it. All of this set in motion a series of responses by the federal government, and the goal was to shore up this federal insurance, the flood insurance program, to make it what is referred to actuarially sound. And essentially what that means is to make it financially viable. It can't operate at this growing debt year after year after year when we have this growing number of natural disasters. Well, the impact, especially on coastal residents and businesses financially, may be very significant as it relates to the most recent move. And in some cases, it could be even financially catastrophic. But it's hard to get our national leaders' attention about something like flood insurance when there's so much noise on the national level, and this is truly a national problem. So if you think about the challenges that our nation is facing right now, and there are so many, there are a lot of conflicting objectives. Just watch the national news today. Go today and ask yourself, what are they focused on? Well, certainly they're focused on COVID. They're focused suddenly on voting rights. That's a big issue that they're facing today. We don't hear them talk much about it, but certainly there's this constant drumbeat that changes need to be made in the health insurance program. Of course, they're still talking about infrastructure. But so if you just look at all these different conversations that are taking place, there are countless competing objectives. There's just a lot of noise on the national stage. But there's a looming issue as it relates to the flood insurance program, likely to have a severe impact here in coastal Mississippi. And really, frankly, other coastal communities across the United States. Now, again, it's not just a coastal community issue, but the coastal communities stand to be impacted very significantly. The number of population in the United States that lives near or on a coastline is very, very significant. The former incarnation of the National Flood Insurance Program actually expired last year on September the 30th. The stakes are going to be really high as this new program starts to get implemented. And I'll tell you, we need a reprieve, and we're getting this final hour now, and we're still working to get one, and we need it more quickly than unfortunately it's coming. And I think part of the problem is this atmosphere of noise that we're trying to have this conversation within. So here's where we are. FEMA has a new program. It's called the Flood Risk Rating 2.0. It was implemented for new policy holders on October the 1st of last year, and it will be implemented for current policy holders on April the 1st. Unfortunately, too many people are getting caught off guard by this change. But the water on this, I have to tell you, has been boiling for a very, very long time. It's been literally years in the making. When I was publisher of the Sun Herald or the Press Register in Mobile or the Times-Picayune in New Orleans, I can't tell you how many editorials we wrote about the insurance situation, and especially the coming challenges as it related to the flood insurance program, because it was not actuarially sound. In other words, it was not financially viable, and something had to be done to change it so that it wouldn't continue to go in debt and had this issue that we were facing. The question is, how do you make it actuarially sound and in a way that didn't cause everyone's rates to go sky high? Local media started to kind of focus on this a bit. But if you do a Google search on this, what you'll find is that countless stories have been written about this all across the United States, especially in coastal communities, but not just in coastal communities. For example, in Dallas, the Dallas Morning News wrote a story about this, and they talked about not only these changes by FEMA and how they're going to affect getting insurance, but it literally defining who actually gets covered in the future by the National Flood Insurance Program. You see countless stories from South Carolina. You see a bunch from Florida. And why do you see so many from Florida? And there's a reason I point this out, incidentally. I'll come back to that in a second. Of the 5 million National Flood Insurance Program policies nationwide, 2 million of those are actually in Florida. Think about it for a second. Think about all these coastal areas along the Florida Peninsula, especially as you go down into the Keys. Big impact. Now, look, this is important. Sort of Texas, Louisiana, Florida, all these other states are impacted as well. This is important because with all the noise on the national level, we need our leaders, senators and representatives from all these key areas to work together. And you'll see stories about what Marco Rubio has done and other senators and representatives across the United States. Various bills, you've had a bunch of bills that got rolled into one. There's a lot of energy trying to figure out how to phase this in, how to make the impact not so great. But the reality is, unless something changes, the impact for coastal Mississippi is going to be very, very significant. Now, with that in mind, I had a conversation with Frank Bordeaux. He's an insurance executive here in coastal Mississippi. He's got a great bird's eye view on what's going on as it relates to all of this. He's been working really hard to try to build a head of steam around this. And I invited him to come on to Coast Vue, not only to give me a chance to kind of get up to speed on what the current opportunities are to find a reprieve, but to have a more deep conversation about the history of all of this so that people who are now going to get impacted, they can understand that this did not happen suddenly. This has been in the works for many, many, many years. So with all that said, I want to welcome Frank Bordeaux to Coast Vue and tell you thank you for joining me today, buddy.
Thank you for having me on.
So look, let's do this. I want to remind people what you do and what your specialty is and why you're so focused on this. But before we do that, you heard what I had to say. When you kind of have to give an elevator speech to somebody about what this issue is as it relates to coastal Mississippi, how do you talk about it?
Well, really, the conversation started, like you said, October 1st was the big date, and we really didn't know what the rating was going to look like until right before, probably a month before they implemented it, which was very difficult for insurance agents to be able to get ahead of this to let your clients know what was going on. But October 1st is the big date. Then April 1st is going to be the next date for current policyholders, as you said. One thing that I remind folks, especially here on the Mississippi Gulf Coast, is one of the big aspects of the change is the loss of grandfathered policies, policies that were, and so that's going to be a large effect on a lot of folks that we're not able to elevate post Katrina, and so I believe that's going to be the most devastating side of this. The rate increases are going to be devastating as well, but we're going to have entire communities that are going to be difficult to sell the properties or to insure.
Yeah, the grandfathering issue is really gigantic for coastal Mississippi. And let me describe why that is. And we're going to come back to this in a second, but why this is so important. Okay, we got hit by the largest storm surge in American history. We all know that. That was Hurricane Katrina. As a result of that, the AVFE requirement, in other words, the base flood elevation requirement for coastal Mississippi, increased dramatically. Okay. What the federal government said, and now they're changing the rule, which is basically completely unfair. What they said was if you had less than 50% damage, you could rebuild. And that was the 50% was a really important percentage. So people, they're trying to get back in their homes. They're trying to get rebuilt. They're trying not to have to tear down a structure that had less than 50% damage. And what they said was, okay, you can rebuild in the floodplain even though we're increasing the base flood elevations. And you'll be grandfathered in the program. And what they're saying now is they're changing the rules for all of us who just happen to be hit by the worst natural disaster in American history. Why it applies more severely to us because the base flood elevation for coastal Mississippi rose so significantly. We have a high number of homes that were in that 50% range that rebuilt. And now, and they did under the guise of being grandfathered into the program, but now they're going to suddenly find out that they're not grandfathered anymore. This is a very serious issue for coastal Mississippi. And this whole grandfathering issue should have never been done away with because people decided their futures based on what the federal government said to them. When we come back, we're going to continue our conversation with Frank Bordeaux and really kind of break it all down. What happened on October the 1st, what's happening on April the 1st, and what the hell can we do about this? We'll see you after this break. Welcome back to Coast Vue. We have Frank Bordeaux, a real estate executive here in coastal Mississippi, and someone who's passionately engaged in the discussion around the changes in the National Flood Insurance Program. And what we're going to do, I was just talking before we went to break about this whole notion of dropping the grandfathering clause. We'll come back to that in just a second because this actually began as they started to propose new changes in the program back as early as 2012. We were able to get a sort of a momentary reprieve. We'll talk about what that was all about. But now we're back to where we were before, with this whole notion of dropping the grandfather clause. Now, look, there's a lot more to it than that. Some people's rates are going to go down. A significant number of coastal Mississippians' rates are going to go up, in some cases very severely, because the criteria for determining what your rates are going to be, that's also changed. They've taken all this new data, a lot of new science and computer science and all this stuff. They're smarter than they used to be, and they're trying to update the program to make it, so to speak, actuarially sound. But the impact is going to be great. So, Frank, why don't we do this before we go any further? Let's remind people sort of what you do day to day and sort of who you are.
Well, I'm obviously insurance agent for BXS Insurance, and we handle on my team a lot of coastal property. Over $4 billion worth of TIV. So this affects me as well as my clients, and so. With having as much coastal exposure as our agency has, we're primarily a coastal agency. We've been very involved in flood insurance. We're in D.C. 4 or 5 times a year working on flood insurance. We're members of the Council of Insurance Agents. They've been working very hard on this. We're actually going up in 2 weeks to work on this issue with the council. And so that's basically what I do on a day-to-day basis. It's a very challenging market, whether it's wind insurance or cyber liability is very challenging right now. This flood issue is going to be even more challenging for the folks on the Mississippi Gulf Coast. And so it's very, very concerning. And hopefully we can unwind this over the next several months.
Yeah, no, it's a tough one. So let's go back and build a little history. What we're currently working on is implementing this whole 2.0 process that has the dropping of the grandfather clause, increase, and again in some cases decreasing. But essentially what they're doing is they're just trying to build what they see as an actuarially sound process. But we didn't get here overnight. So let's kind of go back to Katrina for a second. Katrina hits, and I mean, not that we didn't have huge losses before Katrina, but Katrina was a real turning point for the flood insurance program, wasn't it?
It was. The largest year prior to Katrina was 1998, Hurricane George, less than $1 billion worth of damage. Still a lot of damage, and that was over the course of all of 1998, which was a busy hurricane season. Then Katrina comes, and obviously we saw a massive debt and we, quite honestly, it was scary at that time because the FEMA did not have enough borrowing authority to fund the program to pay all the claims, and so they had to get authorization to increase that. Fast forward, we're $9 billion in debt after Katrina from the flood program, and so that's when the first talk of an actuarial sound program. Folks on the Mississippi Gulf Coast and Louisiana and folks that deal with flood insurance every day, it was really, we look at it, it was encouraged to build on the coast. As you said, 2/3 of the population live within 100 miles of rising water in our country. And that happened over the course of 1968 till where we are today. So it was encouraged to move close or near around the water. And it was subsidized by the federal government. Obviously, when we go to actuarial sound, it's very difficult to wrap your mind around a flood, a single peril insurance product that in its existence that was created with the idea we're going to have adverse selection. You're not going to have a spread of risk across the country. And so it's very difficult to then put an actuarial sound program years later, decades later, and expect folks to understand or be able to pay the premiums. It's just not possible.
Yeah, it's been supplemented all those years, and we learned a lot about insurance. At least the average person had to learn more about insurance because, this whole notion of being actuarially sound wasn't just related to the flood insurance program, but what had happened along our history was that you had insurance carriers that were writing for wind and other comprehensive aspects of your homeowners and business coverage, and then you had the federal government over here handling the flood part of it. Now, it was being administrated by insurance companies where they were getting some fees to do it. But at the end of the day, this is essentially a program that had been underwritten by the federal government, even though over the last few years, they've been having to go to the reinsurance market themselves to build some capacity there, but not nearly enough, right, Frank?
That's correct. Prior to the Affordable Flood Act in 2014 passing, they weren't required to buy reinsurance, and they weren't required to keep their surplus. And so that was one of the great things that happened in 2014 was the requirement to buy reinsurance. And when I go to Washington, I kind of equate it to our wind pool in Mississippi. Our wind pool is very, very well ran wind pool. They buy a very large amount of reinsurance, and they have their surplus, and they keep their surplus aside. And so we have one of the strongest wind pools. If the National Flood Insurance Program had done that from day one, we'd be in a different situation. They're buying about $1.5 billion in reinsurance right now. It costs money to do that, but it saves the taxpayers money. And I really wish they would look at buying higher limits of reinsurance to protect the federal government, but rather than getting the higher premiums today. We collect enough premium to buy reinsurance.
Okay, so look, let's you and I are throwing reinsurance out there like people know what we're talking about. So explain what reinsurance really is.
In its most simplistic, if I'm an insurance carrier, I will take a portion of the risk, and then I actually go to London or Bermuda or some domestic reinsurers, and I will buy insurance on the insurance placement that I placed for you. So State Farm, every insurance carrier goes and buys a certain amount of reinsurance to protect their risk.
Okay, so there's that. Okay, so as we continue on, so Katrina happens, we have not just the Katrina event, but a swirl of other increasing number of natural disasters, putting even more pressure on the program. What happened in 2012?
So 2012 was the passage of Bicker-Waters 2012, and Bicker-Waters was the first bill that actually required actuarial sound got rid of grandfathering. A lot of the things that we're dealing with today was implemented then. And we were able to, over the course of time, it was really a coastal issue until it was not a coastal issue. Shortly after the passage, they had floods in Houston, they had floods in Nashville, they had floods in Colorado. And so it went from being the coastal delegation of House and senators upset about it to it became a national issue. And by 2014, we were able to get a fix in place. Consequently, over time, the FEMA put together this RISP 2.0. And like you said, the big issue, obviously, take grandfathering aside, is the recalculation of how they're determine their premium. What really affects us and really will upset a lot of folks in coastal Mississippi and Louisiana is we're not only looking at elevation, but we're looking at distance to water. So I built my house 6 feet above what I was supposed to, what the federal government told me to have low rates. I'm in private flood insurance market. I'm not in the NFIP, but if I were in the NFIP, my premium would be about $8,000 under the new RISP 2.0 calculation. And so it's very devastating. But for folks that did elevate and folks that are in X zones, there is a private flood market out there, and it's starting to, because of what NFIP is doing, they're starting to get more and more private flood carriers out there. We've always told folks, and if they're grandfathered, do not go into the private flood market because you'll lose your grandfather status. Hopefully we can reinstate grandfather status, but if we lose it, the private market may be the only place for some of these folks to go.
And again, it's hard to not go down that rabbit hole as we continue to sort of build what's going on. But I'll just point out that if someone is grandfathered in, and there are a lot, do we know what that number is? How many people are grandfathered in coastal Mississippi?
I don't know. I could probably get that number. I know we used it last time in 2012, and we were able to get it. The NFIP can provide that for us.
It's probably thousands. It's thousands.
Definitely.
Okay. The notion of losing your grandfather and therefore your low flood insurance rates and having to go to the competitive market. Your rates are going to go up very, very significant, even under that scenario. I mean, if you stay with NFP, it's going to be even greater, most likely. Tough situation. But when we come back, we're going to talk more about these criteria that they're applying now and how it's changing the way they used to do things, and then where the reprieves are necessary. One has to do with how quickly they elevate your rates. The other has to do with grandfathering. There's some other aspects to it as well. We'll be back with Frank Bordeaux after this break. Welcome back to Coast Vue. We're having a conversation about a looming, very significant issue for coastal Mississippi as it relates to the National Flood Insurance Program. And there are a lot of moving pieces as it relates to it, but just keep in mind, this is the things you need to know. Number one, if you were grandfathered in after you rebuilt at below the recommended flood elevations because they said you could, they're going to drop the grandfather clause, and that could have devastating impacts on your flood insurance coverage. If you have a mortgage, you have to have flood insurance, so you don't have a choice. Second, your rates are going to, in a lot of cases, rates are going to go up, and it's because they've changed the criteria as it relates to that. I think there's some limits to how much it can go up a year, but it will compound from one year to the next until it gets to the targeted amount. There have been some bills introduced that will slow down the rate of compounding, but don't necessarily reduce the overall rate. Hopefully there's something that can be done there as well. And we definitely need a reprieve as it relates to the grandfathering clause. These are just some of the things that we talked about coming up to this point. What I want to do in this segment, I'm having Frank as a local insurance executive. He's been working on this issue for some time. Like I said, it's kind of like the frog in boiling water. The water's now beginning to boil. It's been going on for a long time. We've seen signs of this not long after Katrina. One of the things that drove me crazy, Frank, after Katrina, actually, and this actually goes to sort of how do you break through the noise on the national level. I remember a speech in the Senate where a senator from, I think it was Delaware, was saying we should not do the things that we're going to do to help those people in Louisiana and Mississippi especially, because there's a bunch of rich people that chose to build on the beach. And it drove us crazy at the Sun Herald. We wrote numerous editorials about it. But there is this, where did this sort of notion that service workers and other people, again, 2/3 of the entire population of the U.S. lives within 100 miles of a coastline, but where did this notion of just rich people live near the water or on the water, and why do people continue to perpetuate that lie?
Yeah, obviously they haven't been down here, and I was challenged with that several times when we were working on the Affordable Flood Act, and I told those folks that would say that they've obviously never been to Ninth Ward in New Orleans. They haven't been to coastal Mississippi and seen some of the issues that we deal with in Turkey Creek and some of the all across coastal Mississippi. I'm not sure where that comes from. I think they think everybody is Miami, Florida. Or South Florida. But the fact of the matter is, if you look at our coastline from the Northeast all the way over to the Texas, those are working class folks. We know that. And so we can't be dissuaded by that notion that we're all rich people buying second homes on the coast.
Because it couldn't be further from the truth, particularly in a community like coastal Mississippi, where it's a destination market in tourism, a lot of service industry people. Think about the shipyard and the people who work there. Think about Stennis and the people who work there. What a demeaning thing to say about us. Not that there aren't some rich people who live near the water, but they pay their taxes. They've earned their opportunity to live there. But to sum it up that way, and to conclude after you sum it up falsely in that way, that we shouldn't help those people because they're rich people and they can help themselves. It's just crazy. It's crazy talk, and it doesn't help. It doesn't help the effort underway here, and that is to bring sanity back to this conversation. But as you pointed out, the Bigger Waters Act sort of set the stage for this whole notion of actuarially sound, and of course, FEMA has always known that grandfathering is one of the things that is a big impact. Now, typically, what happens is you have communities that are built in next to rivers and low-lying areas. They're not necessarily the kind of situations we faced here after Hurricane Katrina, where you had the largest natural disaster in American history that changed the entire scorecard for how we evaluate risk here in coastal Mississippi. And in a way, we get punished, don't we, Frank? Because Katrina hit here. Why aren't Katrina guidelines modeled out in every single community on the coast and make everybody pay their fair share related to that? But we get penalized, don't we?
Yes, and that's one of our points after Bigger Waters 2012 was, we've been mapped. South Louisiana has been remapped. We've dealt with the rate increases based on those maps. And so we really challenged NFIP and challenged Congress they need to make the requirement nationally that before they implement these changes, the nation needs to be remapped. They need to feel the same thing that we're feeling. And so that's happened to some degree. And I know the NFIP is working with some private companies to help them with mapping. And here in Mississippi, we kind of led the charge in that. And the legislature in 2014 gave money to South Mississippi Planning and Development to work with the NFIP to have a private to challenge their current maps that they have. They're in that process right now. They've done an excellent job doing that. But Mississippi's really led the charge based on us being penalized first, really.
Well, I mean, think about it, though. If you were to take the Katrina scenario, which they can do, they can now take the Katrina scenario and model it everywhere. Why don't they go model it over in Tampa? What would the impact be in Tampa? Think about it. I mean, it'd be unbelievable.
Their underwater topography is very, very similar to ours, and so our agency has purchased the same models that they're using, and you can, like you said, you can put Katrina right on Tampa, and it's devastating. What would happen over there?
So, but because Katrina hit here, those that are now being grandfathered, many of them are being grandfathered because after Katrina, the base flood elevation for just about, if not every single home near the water along coastal Mississippi was brought up very dramatically. compared to what it was before. So we have a lot of people that are being grandfathered as a result of that. And I guess the thing that really probably means the most to me is this whole notion as the federal government made a promise to you as a homeowner that if you rebuild and you have less than 50% damage, then we're going to grandfather you into this program. And then now they're changing the rules. Now, essentially, I think part of the intention is not necessarily around a catastrophic event like a Katrina, but you got a lot of areas where they're building entire communities in flood zones, literally in flood zones that regularly flood. And there's not even disclosure. In fact, people are buying into these flood zones. They don't know that they're being, buying into these flood zones. And some of those areas they don't need to rebuild. But you can't apply that same sort of analysis to areas that are going to get hit by hurricanes, because we would not rebuild the entire coastline if we did that.
That's right.
So there's a state of confusion to me as it relates to all of that. Now, what FEMA's trying to do with their new flood risk rating 2.0 is begin to fix some of this. And they're using, as I mentioned, a lot of new technology, a lot of history, et cetera. And they're no longer doing it just based on elevation. Talk about the way that they are evaluating risk now compared to the way they used to.
So, NFIP has always been relatively archaic on how they underwrite. They used to underwrite simply on location and elevation, but they never did distance to water, which I think is quite unfair, especially for folks like coastal Mississippi that has elevated and spent trillions of dollars in investment to elevate our commercial structures and our residential structures. But then also they have a modeling component, which, like I said previously, we do a lot of modeling. Private insurance carriers do modeling. The accuracy of it sometimes is very good, sometimes not. But they're applying the models to the underwriting. So their underwriting process is getting more like a private insurance carrier. However, the distance to water is going to be the thing that really affects us, not as much the modeling and obviously the elevation we've been dealing with for years.
So why add the distance to water component?
I'm not sure. In communities that may be riverine communities, or this is going to be a huge issue for Florida. Florida has always had lower base flood elevations, because vast majority of Florida has a deep water coastline. And so the waves are not able to compound as they are in Mississippi and provide that huge surge. So Florida hasn't dealt with these huge premiums in the past. Coastal Alabama and coastal Florida, everywhere with the exception of Tampa probably, are going to have sticker shock when they see distance to water is going to affect them drastically. But I'm not sure the distance to water should have been applied to everybody across the board. And it's just like any other federal program. It's a one-size-fits-all for everybody, and that's just not the case. They really should underwrite the risk like a private carrier would.
When we come back, we're gonna sum it all up in the final segment, and we'll talk about things that are underway to try to get a reprieve. And we'll talk about what you can do. There's something that you can do. We need to, with all the national noise, the only way that they're going to pay attention is that there's more noise. And we're going to instruct you on how to do that. We'll be back after this break. Welcome back to Coast Vue. I have Frank Bordeaux with me. He's an insurance executive here in coastal Mississippi. He's been all wrapped up in the flood insurance changes that are making as part of FEMA's new flood risk rating 2.0. That's a mouthful, I might add. But it's essentially the new National Flood Insurance Program in an effort to become actuarially sound. They're going back on their word they made to a lot of people, especially here in coastal Mississippi. You go ahead and rebuild and you'll be grandfathered in. Now they're going to drop the grandfather after you spent your life savings rebuilding your homes after Katrina. It's like Katrina never goes away. It seems like there's always something about Katrina that resurfaces. But you may remember during the opening, I said that I probably have been part of the editorial boards, both in Mobile here in coastal Mississippi and in New Orleans, part of editorial boards that have written more about insurance issues than probably anywhere else in the United States. I mean, everywhere I've been, there's been some discussion about insurance. And Biggers Waters came up in between my transition from Mobile to New Orleans, but we were writing about it in Mobile. We certainly wrote about it tremendously in New Orleans. But it seems like we're always begging for a reprieve. Why can't we just get the answer and move on, the fair answer that brings us where we need to be? That's a loaded question. But there's a lot of effort underway to try to create some noise. Let's talk about what you've been involved with, Frank, and then let's give some advice to people who are listening to this that are going to get impacted, and let's advise them on what they can do. But first, what have you been up to these days?
So we've really, never stopped as far as educating and trying to work with our elected officials. We're very blessed in Mississippi that our entire coastal delegate, or our entire federal delegation, is very engaged in this, very involved. Trent Kelly understands that so goes the coast, so goes our state. The governor has been very involved. And I know Commissioner Cheney, last time when Biggers Waters passed, he filed suit against the federal government because they did change the rules. They changed the rules in the middle of the game. And so Commissioner Cheney's very, very involved in this process. So from a state perspective, I think we're doing everything we have to do. Local governments have all signed resolutions down here, the counties, the cities. Harrison County Development Commission is very involved, as well as Jackson County and Hancock County. So I think we're doing what we have to do. We have to educate folks that are not on the coast of what's about to happen.
Yeah. I would say that if you're listening to this, do your homework. I would say this show, we tried to design this show so we didn't talk over your head with a bunch of policy stuff. We're trying to keep it. There's a lot of bills out there. As I mentioned, there's one bill that brought 7 different bills into another bill. There's been a lot of efforts led by various legislative delegations in the U.S. Congress to try to find answers to all of this. And I didn't want to get into all that. I just wanted to be focused on how it ultimately impacts coastal Mississippi and what these changes are that impacts coastal Mississippi, and give you enough information so that you're aware of it, and that you start to understand, okay, what's going to be the impact on me? How am I going to be impacted? If you've been grandfathered, you better pay attention. You better pay close attention. And you just better, you need to do your homework. What I would say is, call your legislators. It's important that your congressmen know, your senators know how you feel. What other calls can they make? If they want to write letters and calls, is there a formal process in place that they can get feedback?
So Harrison County Development Commission, I know Bill Labors has really taken this effort and moving forward. One thing that really worked well, and there was a lot of folks along the Mississippi Gulf Coast that helped us last time that we dealt with this. If you're part of an association, really have your association sign a resolution. I know that Supervisor Rocco and Supervisor Martin are taking it on to NACO, which is the National Supervisors. They have a coastal group, 5-state coastal group, that really takes on big issues. They work very hard on flood issues. They were instrumental in getting the BP funds to us down here on the coast. And so if we can, their meetings in February, and I know they're taking as many resolutions as they can, Home Builders Association, Bankers Association, Realtors, this is going to affect everybody. And so if you're part of an association, please encourage them to sign a resolution in support of our efforts to dial this back.
What Frank and I have tried to do with this show today is to give you enough of the history to give you an understanding of impact, and as tight sort of a buttoned-up conversation as we can have. And what I would recommend you do is go to SuperTalk 103.1 Facebook page and share it with your friends and make sure they know about it. And if they're not on Facebook, go to the SuperTalk Mississippi YouTube page and share it. Text them the YouTube video, or if someone doesn't watch videos, find your favorite podcast, find what podcast they listen to, what format they listen to, and send this show in podcast form to them. But my hope would be that you would take this conversation that Frank and I just had and share it as widely as possible, because there are a lot of people going through the busyness of their lives that don't really understand that this is on the horizon. And this is one they really need to lock on to and understand, because the impact could be very, very, very significant here in coastal Mississippi. And the best you can do is get educated, understand the impact on you, and scream as loud as you possibly can, because there's a lot of noise on the national level, and we got to somehow cut through that so we can get the reprieve that we're looking for. Any final word, Frank?
No, I just want to thank you, Ricky, for really taking this issue on. It's serious to all of us, and it's going to take all of us to dial this thing back.
You bet. Dial it back is what we've got to do. So anyway, thank you very much, buddy. I appreciate it. I hope everybody has a great rest of your Monday, and we'll see you tomorrow on Coast Vue. See you then.